I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, portfolio manager and consultant at Feneck Consulting. Thank you so much for being here. Great to have you as always.
Great to see you, Charlotte. Thanks for having me back.
Yes, of course. We have so much to catch up on today, but where we're going to start, you have a couple of events that are coming up quite soon. So if you wouldn't mind sharing the details about those before we get into the topics today.
Yeah, thank you. So the U.S. is a really interesting market for mining conferences. You know, the big bad ones that people are familiar with are Vancouver, VRIC, PDAC in Toronto. But the U.S. it's hit or miss. There's some really bad events out there. I would just caution investors to look at how long an event has been out there before they, take the time to fly out there, spend the money on the hotel. There's a lot of people starting conferences now that have no idea what they're doing, and they don't really do a good job of bringing the right type of companies and the right type of investors for those companies, right? So at Feneck Consulting, what we did 3 years ago is kind of looked at the landscape and said, what is not getting done at the conference level, or what is happening that really shouldn't be happening? For example, I spent 25 years at big shops like Blackrock and JP Morgan. I had to stand at a booth like a company CEO does, and it's terrible. I hate standing at booths, and I think most CEOs hate standing at booths. So I designed a conference where there's no booths, right? These 10-minute presentations that companies do, like, what's the point? If there's 10 people in the room, who's really hearing your message? So we do, interviews at the conferences on the floor with people like yourself, Charlotte, to really add value, because your program could get to thousands of people instead of 10 people, right? We encourage investors to contact us. We're doing 2 in May, and we probably won't do anything else in the U.S. this year, possibly in Q4, but that's a stretch. It just depends. So it's May 17 through 19 in Washington, D.C., and May 20 through 22nd at the Four Seasons in Fort Lauderdale, right on the ocean. 2 amazing hotels. I've worked really hard at bringing a lot of microcap companies, but also some established companies that we've talked about on your show before, like America's Gold and Silver, USAS, new CEO, new, a couple $100 million in the bank, like really kicking butt out there. And these are the kind of names that people need to understand to broaden out their portfolio. So we hope people will give us a chance and contact us. My info is going to be in the show notes.
Yes, we will have the details in the video description for people who would like to reach out. And now let's get into our topics for today. And I think where we should start is with gold. We're catching up on our last conversation all the way back at the beginning of March. So things are looking a little bit different than they were at that time. We've seen the gold price take a hit since the Iran war began. Of course, still historically high. But I wonder if you can walk me through your reaction to gold's price activity. Has this been surprising for you? How are you seeing it?
Yeah. I'll just say this to your investors. I've been on your show for like 4 years now, so a lot of people have seen my work, and we're always telling it like it is, whether you like to hear it or not. We're not one of those fluff groups that wants to just tell you what you want to hear. This is tough, right? The war situation, if you look at the charts since March 2nd, which was the last time you and I interviewed, that was the high, right? Now it's been 7 weeks of pain. Has that been something that you did, that I did, that investors did? No, it's the war. I mean, look at the price action. It's telling you that the sell-off was generated March 3rd, which was a Tuesday, by just a lot of margin calls, and people are too leveraged out there. So that's what we call an unwinding of that type of position, Charlotte, where people need to sell because they're losing money in other parts of the market, and they need to cover those positions, right? So I think that's what predicated the sell-off March 3rd, and it hasn't stopped really. I mean, we've seen some leveling off, and we did base when Trump said, hey, we're going to do this 2-week ceasefire, right? If you look at the price action when that night happened on a Tuesday as well, things started to really level off and move up, right? But now we're kind of in this period as we record this of, the Vance meeting didn't go off as planned in Pakistan, so that got, prolonged. The Strait of Hormuz is a mess. There's constant news flow there that's not necessarily positive if you think you're getting out of this war tomorrow, right? Like things are going to take longer than people want. Hopefully, we see a resolution here in April, May, June, and we just move on from it, right? Because I don't think that Trump wants to be, in the press with this for months and months. I really don't. But as you know, I called that Russian war for, lasting for many years, is the way I put it, 4 years ago, and it still isn't over. And that has had profound effects, on the global economy, right? In terms of how people perceive Putin and Russia in general, right? So I'm hoping as an American, we aren't going to get ourselves into a situation where this is going to be years and years of fighting, right? I think we can resolve this. And I hope that would be the decision forward. And that would be very, very bullish for our sector. So I just would tell investors, hang in there. You have to fact check yourself, take the weekends, and spend a few hours going through your holdings, doing homework on, hey, has this thesis changed with this stock, right? Like what's happened from March 3rd to now? Not much probably with that stock, right? It's just getting tossed around because of the volatility. However, every person's different. Every person's risk tolerance is different. Some of these stocks have gone, down 50% in 7 weeks. It's not like laughable. It's really serious for the average investor. That's serious money being lost, right? So you have to look at that and say, I need to align with a professional like myself or Don Durrett, my partner, or someone else that can guide you through periods of time like this. You don't need people like us in December, January, February when things are rocking and rolling, right? Like you need people like us now that can help you, that have done this for a couple of decades each. Don and I got started, I got started in commodities in the year 2000, 26 years ago. I started in the business 34 years ago, right? Don's been doing it 25 years. You want people like that can help guide you through difficult times like this. Neither of our services require people to sign up for a year or anything weird like that. So they can come for a few months and leave if that helps.
Well, and just a side note, I had Dawn on, I believe, last week. So there's a recent interview with Dawn here that people can check out if they would like to. Just taking a little bit more of a look at what's going on with gold. So do you have an idea of where we have support and resistance for the price right now, or is it really too tricky to say at this time?
Yeah, sure. So we got into the 4100s on that decline in March, but it was really quick and short-lived. The price of gold just went right back, to this range where we're at now, and having trouble with 4,800 a bit. But 5,000 is that big round number in the sand. I think that's very attainable. We're trading at 4,700 right now as we record this. I think the all-time high of 54 to 5,500 this year that we achieved will be achieved again within 12 months. So that would imply an 800-point move, right, in gold price. That's going to mean very good things for gold stocks, which we can talk about in a minute.
Right. And the trigger for gold to perhaps move higher at this point is that we just get out of this war uncertainty and have that come to a close, and that maybe starts to send gold higher?
That would definitely help to, see gold's rebound off of the March lows. And, Trump has demonstrated that he will go after anyone. We've talked about Venezuela. We talked about Cuba. There's a long list of countries that I didn't have on my watch list, in 2025. So there's going to be a lot of uncertainty in a Trump presidency, and that is something that gold and silver love. They love uncertainty and they love fear.
Absolutely. And just maybe a quick sidebar right now. I know the Iran war is taking up a lot of what's going on in terms of gold and silver right now, but we do have our next Fed meeting coming up next week. And you're saying before we turn the cameras on, this could be the last one with Jerome Powell. We had the Kevin Warsh confirmation hearing this week, although we're still waiting on actual confirmation. So what will you be watching most closely at that meeting, keeping in mind also there's so many concerns now emerging about inflation because of the war?
Right. So Powell has been pretty pragmatic, as you know, for his entire tenure. So I don't see any real fireworks in April. I really don't see that happening, and we don't know about Warsh yet, so we don't know if this is Powell's last meeting. I was just saying that the original talk was Warsh in May, so we'll see. But I think people are going to have a different type of leader in Warsh than in Powell. Powell's an attorney by trade, and Warsh is a very educated guy. I think he might pose some headwinds to our sector initially, in that he doesn't strike me as the kind of guy that's going to be a puppet, right? So maybe I'm wrong down the road, but right out of the gate, I don't think we see that. And so there may be an adjustment in our sector to a new leader like this, which would be bad for price action in our sector. However, I don't know how the Fed gets out of the current situation that we're in. The US is in serious trouble. The indexes aren't telling you that. If you look at the NASDAQ, the S&P, we just made fresh highs in the S&P a few days ago, right? So things seem extremely rosy in the US markets. However, consumer confidence, all-time low. This is including 0809, including COVID, including 00 to 03. How do you hit an all-time low in US consumer confidence when things are rosy? There's two camps out there, like we've been talking about on your show now for a while. It's people that follow Momo growth and think that's it, right? It's all about Nvidia, Tesla, buy these growthy stocks and set it and forget it. That is not going to work in the next 12 months. It's just not. You might be okay and trend sideways in some of those kind of names, right? But you're not going to have exponential growth in growth stocks that have already gone up from March of 09 to now for 17 years, by the way. This is the biggest rally and the longest rally of all time. So when someone tries to tell me they know where tops are or what the next move in the broad market is, they don't. This is controlled by big money. This is controlled by the guys I used to work with at Blackrock, JP Morgan. The big shops out there are driving behavior. But when that music stops and there's nowhere to sit, investors are going to be like, oh, I didn't know I could lose 20% in my 401k, right? That is going to happen in the next 12 to 18 months, in my opinion.
Yeah, I think it is looking dire ahead in that regard. And I wonder if we can maybe look over to something a little bit brighter and get your updates on gold and silver stocks that you're watching at the moment. I know you mentioned maybe because of these price declines, they might not be looking so good right now, but the backdrop hasn't really changed. So what are you watching?
Sure, I'll give you a few. So in silver, to start there, I just did a conference call with the CEO of Silverco today, Mark Iranto. Really interesting story there. And Mark strikes me as a really smart leader who's attracting talent around him. If you look at the March press release they had, I think it was March 23rd, they brought on 3 new executives. One was from the former CEO of Mag Silver, which a lot of investors knew before they got taken out. Another was from Wheaton, WPM, and then another was from Silvercrest, which has also been taken out by Core. So 3 really big, names coming on to bolster the team there. Additionally, they have some real interesting things happening in Mexico, where they're going to have 2 major hubs for silver production. Look, I mean, when you look down the road of what are the newer silver producers out there, like the companies that you can get behind, that would be like an Avino or something like that, not super large, but large enough, and will make just hand over fist money at these silver prices. I think Silverco is a really interesting one. So that one is SICOF in the States, SICO in Canada. For a developer, I really like Blackrock Silver, which is in the US. That one is BKRRF in the States and BRC in Canada. I spoke to Andrew after their PEA was announced. So if you look at the March 31st news, right around quarter end, they came out with a PEA. Tough time to come out with a PEA following the kind of war stuff that we've been talking about on this show. And it was very conservative. They used very conservative gold and silver prices, which sort of muted the upside reaction, I think, right? Because people wanted to see them maybe use a higher silver and gold price, which is look, it doesn't matter at the end of the day, whatever you're using to model these things, the price is the price. So you have to look at ounces in the ground and what is that company's ability to bring it out of the ground and get to production. What's interesting about Blackrock is twofold. One is they're on private land in Nevada, which is really positive in terms of permitting, right? And in terms of quickness of permitting. Number two, they're the only U.S. silver project, according to Andrew, the CEO, that is in this sweet spot where Trump is leading the country and he is fast tracking projects in the US, right? So this is one of those development stories that has a great shot at being fast tracked and getting to production faster than people think. So a construction decision we see happening next year. This isn't something you have to wait 5 years for. So we like Blackrock a lot. Just one thing to point out, that report showed about 89 million ounces of silver. Remember that PEAs and some of these reports don't show all of the metal that that company has. It's just one snapshot in time. And now that metal, meaning silver, is over 120 million ounces of silver. So silver equivalent, that is. So just wanted to point that out. Lastly, metallic minerals would be an explorer that we'd look at right now. They're also in the US as well as Canada. That one is MMNGF in the States and MMG in Canada. They have 17 million ounces of silver, roughly, of actual silver. They have a royalty project, on the side, they have royalties and they have a really nice copper play. And they're not getting credit for a lot of this stuff. They're trading at 19.5 cents US right now. I mean, this thing was at 35 cents on big volume March 2nd. This is what we're saying, right? Here's a great example of a stock that's down 40 or so percent on no bad news, and it's like just wrong place, wrong time, right? A lot of these stocks are getting pushed around. It doesn't mean that Greg isn't doing what he said he's going to do. It means that, a stock like this that doesn't have a lot of, the float is thin sometimes on certain days, you're going to see some downward price action. But they have a relationship with Newmont that people can look up on their website, Metallic Minerals. They have a big support in Newmont, which is, to us, one of the best gold companies out there. So, juniors like this sometimes fly under the radar. It's up to us as value investors to kind of go after them as buys when people don't want them.
Good to get those precious metals company updates. And a question I wanted to ask you, this is one that I've seen among our audience right now, is you're talking to these companies. We're dealing with higher inflation. It's coming through in many aspects of life already, just since the Iran war has begun. How are these companies feeling it? How might it be affecting them? Especially because the miners, of course, they've got high metals prices, so maybe that offsets it. But the smaller companies that aren't yet making money, how are they dealing with it so far?
Yeah, I don't see that really being a problem for the little exploration companies. Maybe not for the developers either. If you're a producer, which means you're going to be in GDX, GDXJ, SIL, and SILJ, the ETFs, you will feel it to some extent because diesel costs are going up, right? I mean, this is a fact. If you look at a chart of diesel from March 2nd to now, it's gone up exponentially. Helium, same thing. You can go down a list of energy related stuff. So yes, higher operating costs for the miners that are producing, absolutely. But I would argue that some of that's going to get offset by higher prices. If you look at silver, for example, right? The silver run on the last quarter, so meaning First Majestic reported in February, Core CDE reported in February, Hecla HL reported in February. These companies saw silver going like this, exponentially, but they weren't clipping the highest price, during that quarter of reporting. Now, when they report in May, you've seen the silver price, hover mostly between 70 and 85 here. I mean, that's insane considering that the cost that these guys have out of the ground is, say, let's say $20 to $22 an ounce. So I think you'll see an offset between the company's increased revenues and what they're putting out the door. So I'm not super worried. You have to be worried if the price of silver and gold declines substantially and we're still at war, because then diesel remains consistently high and you have the metals prices going down or sideways, and that's not going to be a good scenario down the road.
Okay. So that's when we can start perhaps worrying, but not yet. The other point I wanted to raise is the energy sector. So people are seeing higher oil prices. They're seeing all this volatility, and it looks like it's set to continue at least for some period of time. So I think investors are wondering, well, should I be in oil right now? Should I be in energy? I know we usually focus on the metals, but how would you approach that?
So you can look at USO, which is the ETF tracker for oil, and you can see what it's done since March 2nd. We don't recommend anything that generates a K1 for tax purposes. So you may want to look at ETF.com and find something that is energy related that would not generate that for you. But I'm just saying, from a chart perspective, that would give you an idea of how energy is done in the last 7 weeks, and it's up a lot. XLE is the big ETF that a lot of people gravitate towards in larger cap energy stocks, which we've traded over the years many times. But we still like to play in the small stuff that no one's ever heard of. I can give you two names in energy that we like. So Angkor Resources, ANKOF in the States, ANK in Canada. 25% of the float is owned by the CEO and the lead geologist. There's other, people like myself that own big positions, and full disclosure, there's board members that own big positions. There's other big insiders. When you add it all up, it's about 45% plus of the float is in really good, strong hands that isn't selling here at 19 cents. I mean, the stock's at 19 cents. We mentioned it on your show first, I think a couple of years ago, like 8 cents, maybe 7. It ran to 30 cents and now it's back down to 19. But why is this thing down from March 2nd? This makes no sense, because it's an energy stock, right? Like, these guys have a 30-year lease in Cambodia. For those that don't understand Cambodia, it's a country that is dependent upon other people's oil. So what if they hit in Cambodia with a 30-year lease? See, oil flows, Charlotte. You don't need to sit out there and permit this thing and wait for 5 years. You can cash flow immediately in that year. So that's really accretive to a small microcap like this. Not saying they're going to hit. They're definitely not drilling at the moment, but they are going to start drilling in Q4. And that's the kind of stuff you have to look at as an investor. You have to see the path forward. You can't just look at what's happening right now. You have to say to yourself, okay, these guys are going to drill. They have a history of success in their past. What if they hit, right? If they hit, that's going to mean really good things for 2027. And then you wish you were positioned, right? So that's one. Helix Exploration is another that I've given you last year. That one is HHEXF in the States and HEX in Canada. I told your listeners that it was in Montana, that helium was a really tight market, and to get some exposure to things like this. And helium prices have gone up exponentially since March 2nd. So it's really hard to play helium through stocks. There's not a lot of ETFs that play this little subsector. But I like that Bo, the CEO, has been doing this over 20 years in helium, and that they're in Montana. So I'm very comfortable with the jurisdiction. They're in production this year. So, you've got a junior here that's trading at 53 cents US that we think, could have a really good year, especially if we stay, in the war type scenario.
Well, and continuing on in that direction, I know that helium is one of the commodities that's been impacted by the Strait of Hormuz closure. And usually we finish up with special situations, or maybe in this case, it's safe to call them defense type of metals. So anything there on your radar that you would want to bring up? I think you've given us some pretty interesting ones in the past to look at.
Yeah, sure. So we talked silver and energy a little bit. I just wanted to mention one gold stock, please, because since the last time I met with you, I talked about Denarius metals. I went down right before we saw each other at PDAC. I was in the jungle in an underground mine there. Really cool people down there at Denarius. So that one is DNRSF in the States and DMET in Canada. I'll tell you, they just announced a due diligence trip for next month to Spain, which is their other project. So Colombia is their lead project where I was, and Spain is their backup project that's going into production this year. So I'm going to check that out because I feel like this could be a huge growth stock for gold. I mean, they just announced their revenues. They only did 1.7 million in revenues last year, and they did 3.5 million in the first quarter. But that's with a very low tons per day, operation. This is going to ramp up a lot faster than people think, because I was on the ground and I can see this is going to go much, much faster than people expect in terms of what's happening in Colombia. But Spain is their growth engine, right? And if you look at their February 19th release, they talked about the Saudis really being interested in their Spanish operations because guess what? Some of these countries that are out there that are pro-US don't have a relationship with China. They're not getting the metal either. So they have to do things like partner with companies like Denarius. So that press release talked about a joint venture, of the terms of which haven't been discussed since then, right? So that's a catalyst. When you see a news release like February 19th, you say, okay, this is really positive, but they don't follow it up the next week with terms. It might take a few months, and right now we're at a few months. So I think in May or June, we might see some good news there. And that has become a pretty big goal position for us. So I'll move into special situations. I mean, we've talked on your show for, I think about 3 years now about tungsten. And I don't really know too many people that were talking about it then in my role. I got into it in the fall of 2023. I got into antimony that year as well. And they're just defense metals, right? They're used, tungsten specifically is used in body armor, piercing bullets, tanks, missiles, you name it. This is all very topical now. If you look at the tungsten price, it has gone from $920 average price spot Jan 1 of this year to $3,040. This is insane. Like, this is 3 months and a little bit of price action, something going up a few 100%, right? This isn't a stock. This is the price of tungsten. So that just underscores there is no tungsten globally. 90% of this is controlled by Russia and China, and they are not giving it away. They even cut off the Japanese in January. So there's just none of it to be had. So we've really started overweighting tungsten, 2 years ago, but really heavily recently. So I'll give you two names that I talked about on your show before, and I'll give you two new names. So the first one is Guardian Metal. That one's GMTLF, and that's GMET.L in London. They don't have a Canadian ticker. They're taking that GMTLF ticker and moving it to GMTL in the US. So, they're uplisting on the NYSE, bringing in a lot of liquidity to the stock. I think that they're coming out with their PFS sometime in June, because they've been saying late Q2, right? So let's say June 15th through June 30th, you're going to see a PFS from them. That's pretty exciting considering that no one knew about these guys, 2.5 years ago. So when we started in the stock, we got it very cheaply. It's trading around $365 a share right now, US, on GMTLF. So it's run up a lot. If you look at the chart, you might say, why would you buy this? Well, it's in Nevada. They have multiple projects. They have a billionaire, Stan Druckenmiller, who a lot of listeners know, in the stock. He owns 15% of the company. They have a lot of interested parties that want positions. One of the reasons they uplisted was to bring in these new institutions that didn't want to buy in London or didn't want to buy on the OTC. So now they've got another vehicle for that. Spartan Metals is another one. That's SPRMF in the States and W in Canada. They just completed a financing. As you know, Charlotte, when you complete a financing, the stock drops usually. We saw the same thing happen with SPRMF. It was trading just fine. They had great news in March. They acquired a huge tungsten project in Nevada. Stock ran up hard, and then they did a financing. Stock ran down hard, and now it's recovered already. And that's kind of like a barometer for what's happening in this little subsector. The company, when you see these financings being done, because these juniors need money, you buy it, a depressed price there, knowing that this is a temporary, issue for the company. They need money. Stock's going to drop. But you buy more there, or you start a position there because the stock's going to rebound faster than you think. Another one that's just announced a financing is Western Star Resources. That's WSRIF in the States, WSR in Canada. They just announced a small $3 million financing. Again, stock was at 46 cents US when it got announced, ran down to 37. Now it's trading at 40. It's going to go right back to 46, in my opinion, within the next few weeks. I mean, as soon as this financing is closed, you see a move back to former prices a lot of times in these stocks. What people are missing about Western Star is that they have just like doubled the size of their main project in Nevada just recently. And they have a gold project as well that's in Canada. So there's multiple ways to win there. I just think that they're going to build that project in Nevada, much more. Like the plan for their money, why they're raising the money is to drill, right? So like, I think you expand the resource there. The exciting thing about Western Star is that their grade is exceptional. So when you look at the average grade in tungsten, it's around 0.3%. Their grade is over 3%, so 10 times the grade of the average tungsten junior. So pretty insane upside there. And lastly, I'll just mention Sidney Resources. That one is SDRC. They're in Idaho. They've recently just started to put out, sometimes, Charlotte, you don't get the whole picture with a junior on one podcast like this or one news release, right? You have to do more work. One of the things that's been interesting about the company is they've talked about their silver and their rare earths, two areas we really like, but now they're starting to put in their press releases about their tungsten. And so, I called the company. They have a pretty nice sized tungsten deposit there in Idaho. Again, this hasn't been their primary focus, but the stock has really rebounded. It was down to like 19 cents US recently. It's now at 26, 27 as we record this. Hit 30 cents on really good volume this week. So yeah, I think, that one is one to watch as well.
Okay, well, that was quite a collection. Thank you so much for sharing. We got two new tungsten ones that I know that we haven't talked about before, so that is pretty exciting. And I think we can wrap it up there, unless you had any final thoughts that you would want to leave people with right now. No,
that's it. I really appreciate the opportunity to come on, and like I said, my contact info will be in the show notes if anyone wants to reach out.
Perfect. Well, I'll let you go for now. I'm sure we'll be back soon to talk about new developments, but thank you so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.